Over the past 12 months, Palantir Technologies shares have delivered a jaw-dropping performance on the stock market, rising by an impressive 482%. This dramatic surge in value has placed the artificial intelligence software provider at the center of investor attention. The primary catalyst behind this rally has been the growing appetite for Palantir's artificial intelligence-powered solutions, which are being adopted across both the public and private sectors. As this demand continues to expand, Palantir has reported notable improvements in both revenue and earnings growth, reinforcing investor confidence. Despite this extraordinary momentum, questions are beginning to surface about how long Palantir can sustain such a trajectory. Investors are naturally cautious after such a meteoric rise. While the company's growth narrative remains strong, some are starting to wonder whether the stock has gotten ahead of itself. Among the 28 analysts who cover the stock, the consensus 12-month price estimate sits at $107. This figure suggests a potential decline of roughly 23% from where the stock is currently trading, raising some eyebrows among cautious investors. Even more telling is the sentiment among these analysts. Only 21% of them have issued a buy recommendation, while a majority, about 61%, have rated the stock as a hold. This distribution indicates that while analysts are not necessarily bearish on Palantir, many believe the stock is priced close to its current worth based on fundamental metrics. That has led some investors to wonder if now might be a good time to take profits, especially considering how expensive Palantir has become when compared to historical valuation norms. Looking at its valuation, Palantir now trades at a trailing price-to-earnings ratio of 574. Its forward earnings multiple also remains extremely high at 238. These figures place it far outside the bounds of what most investors would consider value territory. For comparison, the average earnings multiple of the Nasdaq 100 index, which serves as a general benchmark for the broader technology sector, is around 30. This puts Palantir at a significant premium, suggesting that the stock's current price is being driven more by expectations of future growth than by present financial performance. Further emphasizing this point, Palantir's price-to-sales ratio is currently 105. This is well above the average for the overall US technology sector, which hovers near 8. Such elevated multiples often indicate that investors are paying a steep premium for anticipated growth. While Palantir has certainly shown it can grow, its valuation implies expectations of near-flawless execution and substantial market dominance in the future. The reason investors have been willing to assign such lofty valuations to Palantir lies in its perceived potential in the artificial intelligence space. Many believe the company is uniquely positioned to capture a significant share of the artificial intelligence software market, which is forecasted to expand rapidly in the coming years. According to data from research firm MarketUs, the artificial intelligence software industry is expected to grow at a compound annual rate of 32% through the year 2033. By the end of that period, it could generate more than $2.5 trillion in annual revenue, providing fertile ground for long-term growth. Palantir's recent performance seems to suggest that it is indeed making headway in capturing this growth opportunity. The company's revenue pipeline, essentially a look at future earnings potential based on deals currently in progress, is expanding at a faster pace than actual revenue. In the first quarter of 2025, Palantir's remaining deal value increased by 45% year over year, reaching nearly $6 billion. This far outpaced the 39% growth in revenue reported during the same period. Encouraged by this strong performance, Palantir's leadership team raised the company's full-year revenue forecast to nearly $3.9 billion. If achieved, this would represent a 36% increase over revenue figures from 2024. Even more promising is the idea that this estimate could be revised upward again, as the pace at which Palantir is signing new deals has accelerated considerably. During quarter one, the company's remaining deal value increased at twice the rate observed during the same period last year, and total contract value surged by 66% year over year. In dollar terms, Palantir inked $1.5 billion worth of new contracts during quarter one alone. This level of activity indicates that the company is not just sustaining growth, it is accelerating it. When we compare this with the expected annual growth rate of the artificial intelligence software industry at large, it becomes clear that Palantir is gaining market share at a rate that outpaces the industry average. That positions the company exceptionally well to exceed growth projections and and potentially reward long-term shareholders handsomely. Another factor contributing to Palantir's strong outlook is the company's highly favorable unit economics. Many of its customers, particularly those in the government and large enterprise sectors, tend to expand their engagements after initial contracts. This expansion helps the company achieve better margins and drives earnings growth even as revenue climbs. The flywheel effect created by strong customer retention and expansion further solidifies Palantir's foundation for sustained profitability. The impact of these economics is becoming increasingly evident in analysts' earnings forecasts. Over the past few months, many analysts have upgraded their earnings growth expectations for Palantir for the current year. Given the strength of the revenue pipeline and the vast size of the artificial intelligence market, it is likely that these projections could continue to trend higher. This scenario would support further upside in the stock, even as it remains priced at a premium. That being said, while Palantir's outlook is undeniably strong, not all investors may feel comfortable initiating a position at such elevated valuation levels. For those who do not yet own shares, it may be wise to wait for a potential pullback or correction before jumping in. Market volatility, sector rotations, or even modest earnings misses could create more favorable entry points. However, the long-term thesis remains intact. Palantir is one of the few companies with both the technology and the client relationships necessary to dominate the rapidly growing artificial intelligence software landscape. In conclusion, Palantir appears to be firing on all cylinders. Its financial performance is accelerating, its market opportunity is enormous, and its execution has been strong. Investors who already own shares may choose to stay the course, while those on the sidelines should watch closely for any signs of weakness that could offer a more attractive buying opportunity. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.